Money Sense.
Welcome to another episode of Money Sense. My name is Mwelu. I am the General Manager for Business Development at Jubilee Asset Management Limited. So while the numbers matter, investing is deeply human. Behind every financial decision, there's a story. And it could be a fear, it could be a dream, or just reacting to the latest headline. And that's why understanding the psychology of investing is so powerful. It helps you become not just a smart investor, but a more intentional one. The psychology of investing is essentially where money meets mindset. It's about understanding why you make decisions and why you make decisions the way you do, even when you know better. We often assume that people act rationally. I mean, we all know what rational people do, but in reality, emotions like FOMO, that's fear of missing out, emotions like regret, or even hesitation tend to drive behavior more than logic. And that's why now the word irrational investor comes in. A real-world example is the COVID-19 crash. We all know what happened in COVID. When the markets were dipping, valuations were all screaming buy. Many people panicked and exited the markets. We saw that in NSC, we saw that in NASI, we saw that in markets all over the world. But meanwhile, those who stayed the course, especially those in low-risk vehicles like the Jubilee Money Market Fund, were able to weather the storm and even more benefit from the rebound. So what we see here is the key difference wasn't the market timing, but again, it was just the mindset and the discipline. And that's why the psychology of investing comes in. So the Jubilee Money Market Fund is available, one in the Kenya shillings. That's the Jubilee Money Market Kenya shillings and the Jubilee Money Market USD. It's actually the perfect example of how to invest with discipline. I'll give you the features. One, it's very low risk, it's highly liquid, and it earns you interest on a daily basis. And this makes it ideal for people who want to grow their money without a constant worry. One of the common behavioral biases that I see with investors is the recency bias. And from the name itself, recent, it's where people assume that recent trends will continue, like jumping into, last year's top performing fund. Another one that comes close to my mind is herding. And this is doing what everyone else is doing, even if it doesn't make sense or even align with your financial goals. And the last one that I can think about is, of course, loss aversion. And this is where the fear of losing money leads people to sell too early or to avoid opportunities which are looking up and entirely, or even exiting from a fund. And this is where a product like the Jubilee Money Market Fund comes in. It helps you protect your capital. And of course, it offers you a steady growth while helping you stay calm and focused in your investment goals.
Money Sense.